Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, definitely a U-turn as far as the Nifty Bank is concerned. Well, when God speaks, even markets listen. Ashwini is the God now. He's joined us again. Ashwini, that was a great call on the Nifty Bank. But what now? Do people climb in even at this juncture?
See, I would think so, because already, shorts are in the price, and, private banks are doing very well. And now PSUs, which had large shorts yesterday, they have a reason to cover. So I think not only PSU banks, but even, other NBFCs, financials, etc., they will have a day of short covering. Now, whether this means something in the longer term, that, only time will tell. But for the day, I think you can still get long on the Bank Nifty, and possibility is that even the Nifty Next 50, which is the smaller mid-cap index, that was down 450 at one point. That's now down 182. So as the day goes by, more and more people realize that follow-through on downside is missing. They are likely to, come back and buy into the Bank Nifty. IT is already strong. So you now have some fuel to take the market forward. So the best days to buy are when, you have this sort of news flow hanging around.
Okay.
As far as calls right now are concerned, I think Axis Bank is coming back fairly strongly. That's a buy with a stop of 560, target of 585. JM Financial is a buy with a stop of 158, target of 170. And UPL is a buy with a stop of 780, target of 810.
Okay, just a couple of stocks actually. There is buying interest that you're seeing in the broader markets. ICICI Lombard, after what was a good set of numbers from the company, that stock is up almost about 5% odd. Dish TV is seeing some buying interest once again, so 3% higher over there. And a couple of the other stocks from the Adani group, like Adani Ports, are also higher. Ashwini, just one follow-up question. In the mid-cap space, do you see more follow-through on the downside? Because we've seen 2 days of pressure now.
See, this news has changed the game. So everybody who went short yesterday on mid-caps, etc., they are back to buying. And the main thing is that US selling has not seen any sort of follow-through. So large caps are stable. So that gives heart to mid-cap. Plus you have this kind of news. So I would think that even mid-caps could recover all of their losses.
Okay, just one more stock that I want to have a chart check on. In fact, two, Ashwini. Piramal Enterprises, which is showing big recovery intraday. In fact, now at the high point of the day, just pull out the chart of Piramal Enterprises and Tata Global. Ashwini, thoughts here?
See, Piramal has been sideways consolidating. 200 DMA is now 2700. So just 2700 kind of stop, and you could easily get back towards 3050, 3100. Tata Global is, no-brainer type of stock. Each time it corrects, you just get long. But I think significant rallies are happening in things like JM Financial. So all kinds of NBFCs where people went short yesterday, that's where they are going to get into trouble.
Okay, Sandeep Bagle is also here with us. Sandeep, the market's actually recovering now. So the Nifty is up about 25 odd points. Mid-cap's also not too bad. What are you picking up?
Good morning, Sonia. I would go with a buy in a ICICI Bank, stop loss of 336, target of 360, and a sell in a Reliance Capital, stop loss of 565, target 550.
Okay, well, thank you very much, gentlemen, for your 10 a.m. trades as well. Very crucial day, and thanks for your help. Let's get back to the bond markets. We have Ashutosh Khajuria, the Executive Director at Federal Bank, joining us on the phone line. Good morning, Mr. Khajuria. Thanks much. Good
morning.
A bolt from the blue. What does this mean for the bond markets? Is there more of a buying left?
See, if you look at, from 50,000 crores additional borrowing, if they move to 20,000 crores, it's roughly, 20 basis points lower vis-a-vis GDP, because we have about 165 trillion as the projected GDP. So 10 basis point is roughly 16,500 crores. So if you are reducing it by about 30,000 crores, you are actually talking about 20 basis points lower fiscal deficit. So if people were talking about 3.5% of GDP as being the fiscal deficit, now I feel as of it could be below 330, it could even be 320, because the way this has been reassessed, probably there would have been a relook at the expenditure part. So expenditure would have been contained, and probably revenue part I can't comment what's there in the bag yet to really assess that, where from the additional revenue is coming.
So on the back of this positive, Mr. Khajuria, what kind of movement do you expect to see in the bond yields over the next few days?
See, there had been two major factors that had brought sort of doom, if I use the term, in the bond market. One was, of course, the uncertainty about the type of slippage, fiscal slippage that can happen. That was one part. And with the announcement of 50,000 crores of additional borrowing, it was given that the fiscal deficit may touch 3.5% or so, because there was additional T-bill borrowing as well. So that was one part. And on the other hand, the statement also came as of, regulator may not be there to, support. And that's correct also when you are integrated with the rest of the world and you're talking of Basel III all, being applied from the date when the rest of the world is doing it. It becomes quite important that, we follow those norms which are globally well accepted, and that is not to influence the market through any outside means. So, of course, it means a lot of pain to the banks, because interest rate risk probably would not have been, anticipated the way it moved, between August and December. Suddenly, the movement was about 97 basis points. It's a big hit to the industry. But, by making it clear that it's not going to be any, distribution of or rather amortization over a period of the quarters, 3-4 quarters, I think that was done in 2013. So probably market was hopeful that in 2013 it was allowed to be in FY14. In fact, it was allowed to be spread over the remaining 3 quarters. Here, I think the remaining quarters were only 2, December and March. And by not allowing that, there certainly is going to be a big hit on the balance sheets of the books.
Certainly. Thank you very much.
Balance sheets of the banks. Yeah.
Yes. Thank you very much. Actually, it would have been so much better if this announcement was 20,000 crores on 28 December. I mean, bonds would not have fallen so much that day. Now, that day bonds have fallen. The provisioning had to be done with that day's mark-to-market losses, because December 29 was year-end and quarter-end. And, unnecessary losses could have been averted. You, of course, can blame banks for several mistakes. But in this case, it was an unnecessary announcement by the Finance Ministry. Why one day before the mark-to-market day? 29th is the mark-to-market day, and you announce on 28th it's 50,000, and 10 days later you say, no, it's not 50,000, it's 20,000. It is such an uncalled for loss for bank. I mean, today my sympathies are with the bankers. You couldn't really blame them for this. How would you ever anticipate that Finance Ministry is going to say 50,000 crore one day before, the quarter ends? Amandeep Chopra is back with us, the head of fixed income trading at UTI Mutual Fund. Amandeep, now where could yields go for the next 10 days up until the budget?
So what a turn of events.
I mean, in 1 hour, yes.
So this is actually quite surprising, because if you really look at the numbers, the issuances on the 5th of Jan and on the 12th of Jan are actually in excess of 20,000 crores. So I don't know where this rethink really came through, because just the last auction on 12th, they accepted almost full 15,000. So that effectively means that there is no incremental supply now for the rest of the quarter.
Okay.
This essentially is, obviously a very bond positive move, because with no additional supply, which will also be a bit of an issue, because you've only had one 9,000 crore issuance of the new 10-year benchmark. So I don't know how will the increased liquidity of the new 10-year benchmark as well.
Okay.
Right, so that's going to be a bit of a challenge for the rest of this quarter. So I think in this backdrop, clearly, like I said, we were talking in the morning, given the sentiments that the yields could, just about go anywhere on an upward spiral. I think the reverse is now somewhat true. There's clearly been a fair amount of short covering, and in anticipation of no incremental supply, a lot of buying taking place today.
You mean there will be a scramble for the new bond, is what you're saying? So in the Friday auction should be extremely well bid.
I would think so, because I just can't, understand on how, will the increased supply of new 10-year now.
Okay.
Yeah.
If the 20,000 crore number is really met, and if you really add up what's been issued on a month to date, I mean, there have been effectively 2 auctions this month.
Okay.
It's already in excess of 20,000 crores.
Okay. So
Does that mean that, this is it, and from here on there's really nothing more, because they had
So what
clearly
is
penciled in.
I mean, where can 7.17 go to, and where can 6.79 go to?
I think that'll be tough to hazard a guess right now.
Okay.
But it's quite likely that, you could see another 10 basis point rally from here on.
Okay. Well, either way, I mean, no surprises. We've been through so much ups and downs in terms of the bond yields.
Yeah.
But Amandeep, I wanted to ask you, on the fiscal deficit front, the market was anyway penciling in 3.5% of GDP, right? As against the budgeted target of 3.2. So will this be a big relief, or is this something that the market was already preparing for?
I don't see any dramatic shift as far as the fiscal deficit numbers are concerned. In fact, that's what I said is very puzzling, and we will need to look into details and maybe get some more information. I think my assumption is that given the the negative sentiment and the volatility we've seen in the sovereign bond market, they've possibly chosen to reduce the supply there and maybe draw down on their cash reserves. Alternately, it's quite likely that they may have had a surge of growth in their small savings, which is also used for part funding the fiscal deficit. So I don't think there is going to be a meaningful decline at all.
Can't there be expenditure cuts?
It could be. I think it could be done, but that would be quite sharp and dramatic at this sort of part of the year.
Yeah, I agree. Thank you very much, Amandeep. This is what we are going to ponder over the rest of the morning, and probably by evening we will have some more details seeping out of Finance Ministry or from North Block on exactly, I mean, how can they have such a dramatic rise in revenues, which they didn't know on December 28? What kind of tax collections? As Amandeep pointed out, small savings. It's difficult. So the only thing that comes to the mind which you can do immediately is a cut in expenditure that could have been planned. But yeah, it is puzzling. Maybe they've struck a deal on the HPCL buyout and that money is going to be taken. I don't know. But the math is at the moment not adding up.
Yeah.
The bond yields are happy with the announcement anyways.
It's been an interesting morning of trade, a heavy morning of trade. So much news flow to digest, right? In case you've joined in late, the additional borrowing from the government will be brought down from 50,000 crores to 20,000 crores. And the bond market is rejoicing on that. So is the equity market, by the way. We've reversed a lot of our losses in the mid-caps as well as in the frontliners. So let's take a breather from that and talk about some more corporates. Den Networks posted yet another quarter of profits with a strong performance on a year-on-year basis. However, sequentially, the company saw no growth. Content costs were up in the quarter while employee benefit expenses were down. SN Sharma, the CEO of Den Networks, joins us now to talk about that. Mr. Sharma, good morning and thanks so much for joining us on the show. I just want to start off by asking you what the outlook is for the rest of the year. This time content costs have gone up by almost about 15% or so. So that's been a bit of a worry. What's the outlook now?
Yeah, good morning to you. Firstly, let me make the morning lighter. You said that the morning is very heavy as of now. As of now, I take this opportunity to convey to my viewers a couple of things that have happened in the last quarter. First, the credit ratings of Den Networks have been upgraded from A negative to A stable. Secondly, Den has been recognized as the most popular cable brand of the country for year 2017. Thirdly, I would like to announce the non-commercial launch of our much-awaited 4K Android Internet TV box. This is having the facility of Bluetooth and Wi-Fi. This is going to bring in a revolution in the consumer homes by making all the consumers' home into a smart home. Smart home means this will be acting as a gateway for interconnect of various IoT devices spread across a home. Today, the number of devices keep on increasing in the home. So, in a nutshell, I can say this will be a 4K enabled device, bringing all the plethora of entertainment, be it internet, be it cable, be it any other thing, on the unified device, that is TV in your home.
Okay.
So these are few announcements that I would like to start with. Now coming to the basic statistics that you just mentioned, yes, we have registered a EBITDA of 81 crore. Last quarter it was 82 crores. Vis-a-vis previous year, it's a growth of 54%. We clocked 53 crores EBITDA in the same quarter previous year. Going forward, I'm sure that quarter on quarter our revenues will keep on increasing in the range of 6 to 7%.
Okay.
As far as content is concerned, I don't see that much of hike that you just now mentioned.
Okay.
It's just nominal hike that has happened, and it has happened over a period of time. As of now, I don't see
Mr. Sharma,
more than 10% hike in financial year 18 and 19. Yeah.
Okay. You said 6 to 7% revenue. Is that year on year, or every quarter on quarter you will expect 6 to 7%?
Quarter on quarter.
Okay.
On a year basis, for the last 1.5 years, we have been giving you in the range of 12 to 15% growth.
Okay. Can you give us some more details about what kind of average revenue per user you have at the moment?
Yes. As of now, you see the subscription rates vary from area to area and phases wise as the government introduced digitalization. Our 50% of universe is in phase 3 areas. Phase 3 area, the end user subscription is in the range of 175 to 200 rupees, and we are already getting 77 rupees. The major growth in Q3 was scored in phase 3 segment of the universe that then operates, wherein from rupees 70 we have taken up our subscription to 77.
Okay.
And if I take you slightly backward, a year back, it used to be in the range of 30 rupees. So the journey is on. All this growth and positive results that Dan is declaring today, or quarter on quarter, is based on the hike in the subscription that the team at DAN is able to increase.
Sir, can you just quickly tell us what the subscriber additions are for this particular quarter, and what could we expect in terms of subscriber addition for the next 2-3 quarters?
See, as of now, we operate in the universe of 13 million subscribers. And we have already digitalized 11.5 million subscribers out of these 13 million subscribers that we have access to. And in coming quarter, on monthly basis, we will be adding around 80,000 subscribers to our digital kitty. And using this access to 10 million plus subscriber base that we hold, we are likely to announce in a month's time a massive broadband plan, wherein today, if we are operating in 10 cities only, we will be opening up the broadband facility to all these 11 million, 12 million subscribers spread across the country in different states of the country. So that will be a major announcement. Just you need to wait for that, and that will change the whole game.
Okay, we'll let you go on that note. Thanks so much for joining us, and we'll await that announcement as well that you plan to make in the next 1 month. For the market, by the way, all the market favorites are seeing some buying action now. So whether it's names like Indigo, Manappuram Finance, Ashok Leyland, there's buying interest about 1 to 2% in all of these names. But let's get a quick roundup of what's happening in the commodity space this morning. Manisha Gupta joins in to tell us more. Hi, Manisha. Morning.
Thank you so much for that, Sonia. Well, we have seen a complete profit-taking come back in case of many of these commodities. Remember, the US dollar has strengthened, and that seems to be putting pressure, especially for the crude oil prices. We are nearly $1 off now from the 3-year highs that we were trading in the markets yesterday. It also has to do with the fact that you have the US weekly inventory numbers coming in today. So ahead of that, there has been some profit-taking. It's nearly 0.5% down is how we've opened in the Indian markets here, and pressure, of course, coming in. We are trading below 4,100 on your screens. The gold and silver prices also have come under pressure. The strength in US dollar, the higher prices leading to lower wedding season buying in Indian markets also has been yet another thing. Even as we are holding around 29,800 in the futures market here, the spot markets are trading above 30,000 rupees on slightly premium being added as the wedding demand season seems to be coming back. The markets also would watch out for further data coming in from US and China in this week to get further direction here. The base metal space, for one, has seen a lot of decline as well. One, you have the strength in US dollar. Two, the demand also seems to be fading in China ahead of the Lunar New Year holidays there, and that's brought the prices down. So nearly 0.5% to 1% of a cut is what we are seeing in the Shanghai markets, and in the Indian prices mirroring exactly that. Trading strategies, we have them from Angel Commodities. They have a sell call on the crude oil prices today with targets of 4,030. They have a buy though on the base metal space. They are choosing nickel as an outperformer with upside targets of 815 rupees for the day today.